In the first two videos of the Personal Finance series, we discussed about protecting ourselves from a financial catastrophe. In a sense, we discussed about risk and ways to mitigate risk. We spoke about financial risk that could arise out of an emergency situation, loss of life, or the rising medical expenses due to hospitalization. These are things that can occur due to the circumstances being outside our area of control. But there are few self-made situations which also leads us to a financial disaster. Usually, such situations involves us borrowing recklessly and falling into a debt trap. Hi, this is Karthik Rangappa, and in this video we will talk about debt and the ways to use debt responsibly. One of the most common and frequently given financial advice which has been passed on from one generation to another generation is to not to lead a life beyond one's means. This financial advice has its weight in gold. Over the years, I've seen many people make financial decisions based on the credit limit available to them. It could be buying that fancy car which is 3x of their annual salary, or maybe going on that beach holiday and paying for it on EMIs. I'm not sure why people do this. It is perhaps to position themselves as a successful person in their society, or maybe for pure indulgence. Regardless, this is a stupid financial mistake. There are instances of people buying clothes on EMI by swiping their credit cards without even realizing that credit card loan comes at the highest interest rate, sometimes as high as 45 to 50%. Borrowing money at very high interest rates only ruins your personal finance positions and takes you further and further away from your financial goals. Most people don't know how to manage debt and they drift away in a downward debt spiral. And this can have a massive negative effect on your life. Borrowing more to repay an old loan, borrowing from friends, family, relatives, colleagues, ruining relationships, avoiding social events, and avoiding your loved ones. The list is endless. Some of you watching this video may already be in this situation. If you're caught in a debt trap, then it is perhaps time for you to question your financial decisions, reevaluate things, and figure out ways to overcome the situation. Here are a few things that you can do immediately. Mistakes do happen. The first thing is to own up to it. Ask for help. Talk to your loved ones in your family and disclose your full financial situation immediately. Reassure your family that you're genuinely trying to overcome the situation and ask for their help. Promise them that you will not slip back into borrowing again. Make a list of all the loans that you already have and tabulate the interest rates you're paying on them. See if you can tap into your savings, if at all any, to repay your loans. Remember, the first step is to ensure you're debt-free. Your savings can come later. If you have no savings, then perhaps think about selling that car that you couldn't afford in the first place. Maybe take up an extra assignment to earn more to repay your loans faster. If none of the above works, see if you have an opportunity to borrow money at a lower interest rate so that you can pay off loans at higher interest rates. Hopefully, some of these steps will help you get out of the debt situation you are in. Alright, so far we've spoken about high interest rate loan, credit card loan, and falling in a debt trap and all the negative things that can happen in your life because of borrowing money. Does that mean having a credit card or borrowing money is bad for you? Let me give you an alternate take for this. Credit card is not evil as long as you know how to use it. Let me illustrate how I use my credit card facility. All credit card companies give you a grace period of 25 to 30 days. This means to say you can borrow money interest-free for up to a month. Use this to your benefit. I literally use credit card to spend on everything, even if it means I have to buy a packet of biscuit from a grocery store. Set a maximum limit for yourself. If your credit card company gives you a maximum limit of 50k, then you artificially impose a threshold of 25k to 30k. This keeps your spending in check. At the end of the grace period, or even before that, ensure you pay your credit card bill. Never ever make a credit card payment post the grace period. If you follow this approach, there are 4 distinct benefits that you can reap. Your monthly expenditure is well under control. While you use an interest-free grace period, your money can continue to lie in the savings account earning you an interest. Most credit card companies gives you loyalty points or air miles, which you can utilize to buy an air ticket or maybe something for your house. Most importantly, by doing this, you can also build a good credit score for yourself. My credit card is also a source of emergency funds for me. Let me explain. Suppose I have an emergency situation, let's say hospitalization, and I need to pay the hospital 1 lakh. I will not hesitate to swipe my card at that moment. I will repay the credit card company by tapping into my emergency fund, which usually takes a day or two to liquidate. Or based on the situation, I may even get a refund from my health insurance. So the point that I'm trying to make here is that any source of borrowing, be it your credit card or a line of credit from your bank, can be a double-edged sword. It can either break you down or you can use it wisely. Sometimes borrowing becomes inevitable. For instance, assume you're buying a new car and you have 80% of the funds available with you and falling short by 20%. You can fulfill that 20% by borrowing. There is no harm in doing that. Irrespective of the reasons why you're borrowing money, you need to ensure that you have the capacity to repay your loan without burdening your finances. Let me explain. Assume your take-home salary is 1 lakh per month. Your savings per month is 30k, your expenses per month is 40k, and you'd like to have another 10k as additional cash for emergencies. You're now left with 20k over and above all your monthly commitments. This 20k is what you can afford as a monthly EMI. Anything more than 20k will disrupt your financial situation. If you backwork on this, you'll realize that your credit taking capacity is 8 lakh rupees, with a maximum interest of 12% and a minimum tenure of 5 years. You can use any EMI calculator on the internet to figure this. So by doing this, you know that taking a loan beyond 8 lakhs is stretching beyond your means. I hope you found this video helpful and hopefully you don't fall in a debt trap. If you've been in a debt trap and if you've come out successfully, then do comment below and let us know the ways in which you overcame the situation. I'll see you guys in the next video.